Hi, Steve Rupp here with the Zulu Group at Keller Williams Indy Metro North. Wanted to talk to you a little bit today about VA loans, specifically assumability. In today's interest rate environment, where interest rates are higher than most people can remember in the past several years, more on that a little bit later, there have been a lot of people who have been talking about the assumability of VA loans and what a great idea this sounds like. Well, on the surface, you're right, it does sound like a great idea. Let's say, for example, your VA seller has a loan on the house, and let's say the house is worth $300,000. And let's say that they have a $200,000 balance on their mortgage, and the interest rate is one of the low interest rates from last year or a couple of years ago, and let's just say it's about 3%. That's a great rate, considering today's rates are above 7 right now. Well, so far so good. Everything looks great and you're like, wow, I can get into this 3% rate. Here's a few things that you may not know that are important to keep in mind as you are considering this option, and it is an option. Number one, you do not have to be a veteran in order to assume a VA loan. That's right, you do not need a veteran and have VA entitlements in order to assume a VA loan. I could assume a VA loan and I'm not a veteran. My dad is, however, and he could still get a VA loan if he wanted to. But for you to understand, it is not required for you to be a veteran in order to assume another veteran's loan. Here is the catch. In order to assume the loan, you have to pay the equity for balance difference in the house. So let's go back to that example of a $300,000 house with a $200,000 loan balance. You're going to have to bring $100,000 to the table in a down payment for that property. Now, there's a lot of people who don't have $100,000 to put down. If you do, this might still be a good option for you. However, it might not be a great option for the veteran. Now, there are some instances where it would be just fine. Say, for example, if the veteran was not going to be living in a house again or not using their VA entitlements to buy a house again. Because here's another catch. The VA entitlements that veteran gets don't go away when they are no longer the owner of that house. In other words, let's continue this example. If you had $200,000 balance left on this house, that means $200,000 of your total entitlements are tied up in this house until that mortgage is paid off. And how long is it going to take to pay it off? Well, whatever the term is left for that veteran's loan. Let's say they have 20 years left. Well, it could take 20 years for your entitlements as a veteran who sold that house to actually come back to you. What is the maximum loan limit for veteran entitlements? Well, it depends on county, but let's just say generally speaking, it is, and I'll use like where I live in Hamilton County, it's $647,200 as of this year. And those limits are changing every year as house prices are changing. But suffice it to say, it's $647,200 that you're entitled to, and you have a $200,000 mortgage balance that your buyer takes over for you. That means now you're down to $447,200 left on your entitlements as the veteran. Now, if you're not planning on buying another house, if you're not planning on using those entitlements, that's fine. It's no big deal. But let's say you are. Now you have $200,000 less of entitlements to use that you could have used on the new house if you were simply to sell that house and have your full entitlements restored. So those are just a few things to keep in mind as you are considering taking over, assuming a veteran's mortgage on a house. Let's say it's a $300,000 house and they only owed $100,000. Well, you're going to have to pay $200,000 down in order to get that entitlement, in order to get that loan balance with that rate. And that might not be very doable or attractive to a lot of people. So make sure you do your homework first. Make sure that you are thinking about where these entitlements could be used. If you're the veteran, are you going to be using your entitlements for the next house or not? And it might be a moot point. And if you're a buyer, you really need to understand what the equity is in the house, and that you're going to have to make up the difference between what the loan balance is and what the sales price of the house is. And that, for a lot of people, might not be possible. I hope this helps. If you have any questions, please let me know, and happy to help answer them. And for this time, I'm Steve Rupp with the Zulu Group at Keller Williams Realty, Indy Metro North. Thanks so much for listening. Make it a great day.